traders, and welcome to some market insights with yours truly, Richard, serving traders responsibly here with Orbex. Today we're gonna cover metals and energy. But first we're gonna let me just go on the economic calendar right here and just see what the market movers are. As you can see from the headlines down there. Um, we actually have some World Economic Forum, right? Some leaders are actually world leaders in economics are meeting all week, and basically we had the BOJ Bank of Japan's interest rates decision, which remained basically the same. That actually has an effect, obviously, on the yen, but also on metals, on gold and silver as well. The next market movers would be the Canadian dollar retail sales, which are expected to decrease, let's say, as forecasted, but also the consumer confidence for the eurozone, as you can actually see from the headlines down there. So next, what we will do is I'm going to cover metals, basically precious metals, gold and silver, and also take a look at crude oil from the energy sector. Okay, now just briefly going on the gold chart on the daily time frame, and as you guys can actually see right here, the way I'm labeling gold after the breakout of the significant trend line, which has been obviously breached back in July 2018. This trend line represents the lows of 2015 December, 2016 December. So it's quite significant because we had some very aggressive bullish reactions on this trend line previously. But as I said, in July 2018, this trend line has been broken, and then of course the bearish impulse, the last bearish impulse, which I'm labeling it as, let's say, from the top right there in the early January, um, actually late January 2018. I'm labeling it as a corrective structure preparing for the impulse. Now what it's doing, what this gold has been doing since August 2018 was basically commencing a corrective structure, in which I'm labeling it as an A B corrective piece right here in this B, and then followed by a rising channel, which I'm labeling it as a C wave, intermediate C light blue right here, but also the X wave for the potential correction. And notice that the trend line is being retested right now. Does look like a corrective structure, a sideways move right here. So I'm suspecting one more upside before something could actually occur. Okay, so again, the way I'm labeling it is as a 1, 2, or possibly we are in the fourth wave position after the big rally, right? Which seems like it bumped its head around here, so it's facing a bit of a resistance. But for that, we're going to jump in on the 2-hour time frame for gold. And as you can see, right here after that rise in the third wave, we had a corrective structure, complex corrective structure, in which I'm labeling it as an A in the subwave minute A red, and then followed by a correction, a complex correction right here, a double free in this type of structure. So W and then X, the connection point, the interruption, the bridge for that for this double free, and then the triangle right here in the E wave, thus completing Y. So WXY completing basically a double free in this minute B red, followed by a C leg, the last piece needed for this structure basically to end. And the way looking at things is basically I'm with the Fibonacci extensions, I'm measuring A with the highest point of B to determine possibly the end of this C wave, right? For a possible completion of this structure. This means that this could eventually rise more. So I'm suspecting more upside for the metals for this last fifth leg. Not sure if it's gonna breach this zone, but it is this pivot point, this support line at 1275 could be significant right here, because if broken, then the next Fibonacci extensions would be 161.8 in a case of in a case when this C leg could be extended. However, I'm not really looking at that possibility right now, okay, because we do have some sort of, divergence possibly around the corner right there, bullish divergence. So this could actually mean something. Not to mention that from the entire rise of the third leg, we had a 23.6 Fibonacci retracements aligning with the 100%. So it's like does look a bit promising, right? For gold to actually rise. I am seeing some possible weakness ahead, possibly coming for the dollar index, which means a softer dollar, which could translate into bullish metals and euro. But for that, we're going to cover it on the FX majors next to come in the market insights. So enough about gold. As I said, just to keep it simple as a summary, this could rise and start and basically an impulse to finalize the entire piece for the C leg intermediate light blue. Okay, moving on to silver on the daily time frame, kind of the same structure right here after the sell-off right here, just like gold has reacted on the upside in the let's say 11th of September. So mid of September reacted on the upside, which I'm labeling it as an A wave, intermediate A blue, followed by a correction, a WXY in this piece right here for the B wave, the correction of A obviously, which formed a new a lower low than lower than the start of A, right? Which means that this could be an expanding flat in this type of sequence, but regardless of that, the C leg has to end, right? So the way I'm labeling this C leg is in a leading diagonal in minor 1 green, followed by a very small correction which can alternate right here. The corrections could alternate. This is some sort of a, let's say some people would try to look at this correction in wave 4 minor 4 green as a bull flag, possible bull flag, right? And not to basically, let's say for instance from A to B, Fibonacci extensions, the 161.8 are aligning with the 38.2, and 200% is aligning with 50%. And as you can see right here, there's a vibration zone, which I'm basically marking it right there. And I'm suspecting 261.8 for silver, right? In case of a bullish impulse right here in the last wave of 5, minor 5, green, thus possibly ending, if this scenario would come true, thus it would actually end the C leg, intermediate C blue. So moving on to the, let's say for instance on this indicator, yeah, the third wave, which is the most powerful, the rally right here in silver, is being sustained by volumes. So I wouldn't be surprised if this would actually align and confirm rise, right? So let's just move on to silver on the 2 hour time frame, in which, let's say for instance, that fourth leg, I am labeling it as a double free as well. Not like silver, it doesn't really have a triangle in it. However, it does have a W and then X connection point, and A, B in a running flat in this small sub minuet um, B, and then the C leg right here, thus ending this motive structure in this small c, and possibly ending a WXY for this structure. As I said, it is channeling on the downside, so it could mean more upside for this if this obviously if this would break out, and for silver to actually prove that it's could be going bullish. A breakout would be needed and a support right around here at this, let's say for instance, maybe at this fibs previous vibration zone right here. As you can see, it entered another wave 4, and as per the Elliott Wave guidelines, let's say a wave 4 would typically enter another wave 4 of a lesser degree it will enter its territory. Yeah. As for the volumes right here on the let's say the indicator on the 2-hour time frame, this could be a bullish divergence right here around the corner. So as I said, I wouldn't be surprised if this would shoot on the upside. All right. So basically, so far the metals are looking bullish. I would actually say that's my 2 cents. As for crude oil, let's just move on to crude oil on the 2-hour time frame. And after the sell-off, which obviously you guys know that I was, let's say for instance, I was ready for the sell-off right around here, and then performed an epic sell-off, I would say. It lost a lot of ground, and it's let's say for instance it reacted off the 61.8 of the entire rise from 15th of let's say January, middle January 2016. So it kind of retraced a lot. All right, so it did react towards the, I mean, on the 61.8 retracement golden ratio, but also the way I'm labeling this entire correction is in an A, B right here in this structure, and then the C leg, thus possibly ending a larger degree correction. So in other words, I'm kind of looking up for the crude oil right now. However, it would have to prove itself as well, and we're gonna go on a smaller time frame for that. Right now, I'm on the daily time frame, and you guys can actually see the proper impulse labeled right here with the um, triangle in minor 4 red. And the Fibonacci extensions from A to B they do point towards the 361.8, so massive extension on the C leg on the intermediate C red, followed by, of course, accompanied by a divergence right there. So it could be, let's say for instance, this could be a first wave, right? So wave 1, but for that I would actually need as I said, crude oil to prove its bullishness. So in other words, what I would be looking for right here would be a corrective structure, but in a wave 2. And for that, I'm going to go on the 4-hour time frame on crude oil WTI West Texas Intermediate. So the way I'm labeling the rise is in a wave 1 and then 2, right? And then followed by the extension. Now this could be, let's say, 1, 2, and 3, the rally, followed by a wave 4 and then the wave 5. So in this scenario, in this situation, I would, let's say for instance, if I were to treat this as a wave 1 for the extension itself, right, for this, then I would need a 50% 61.8 retracement in the wave 2. But for that to actually occur, I would need a simple type of correction, either a sharp correction or a zigzag, in a sense that this could be A, then this could be B, and then followed by a 5-wave sequence in C, such as this. Just like, let's say for instance, more of a simple type of correction. So it would look like this. Okay, something that would typically channel and basically possibly gaining support at the 50% as soon as it breaches, let's say, this potential zone. And there is something that we could take a look at. This could be an inverted head and shoulders for the upside, not to mention that it is entering a vibration zone right here on the previous triangle in this wave 4. So this is a vibration zone, this is a point of interest, this is where price vibrates and the decision has to be made. But before the breach, let's say before the breakout, possible breakout on the upside, I would expect a contraction so that the bulls could you know recharge and then possibly take control. So for that, right, um, we're basically almost done with this market, let's say market insights section. So I'm gonna keep it simple, but before I go, I'd like to leave you guys with something. Recently, the quarter 1 report of 2019 has been released right here for you guys, in which I'm explaining, I'm labeling and explaining, doing some market technical analysis based on Elliott Wave. So let's say I'm speaking about the VIX, the volatility index, and the actual location, dangerous location of it. So could be, you know, could be quite significant. I'm like basically covering the forex majors and precious metals and in the indices as well. But let's say, for instance, if you guys want to download this, it's a free download. You guys can actually ask your account manager for it at Orbex. But if you want to view it in 360 as well, view those charts in 360. They are uploaded on the Orbex blog, so you can actually take a look and step inside a new trading dimension, let's say with a 360 panoramic view, 360 degrees. And as you can see, I've been, let's say, an example right here on gold, right? With that channel, I was actually expecting this contraction. So we'll see if it gains support for the upside. For now, the outlook could be looking bullish, right, for metals, but also for crude oil as well. That's enough for today. I will see you guys next time. Thanks a lot for watching. Remember, please to support this playlist with a thumbs up, and I will see you at the next turning point. Until then, as I like to say to all my traders, stay in the green and many pips ahead. Bye for now.